Good morning and welcome to the Opportunistic Trader for August 15th, a Wednesday, middle of the week. It's been a very, very good and interesting trading week with a lot of volatility across the board in pretty much every sector, from global markets to currency markets to commodities, and across the board to U.S. equities have been swinging pretty good, having a 15 to 20 handle range minimally every day. I first want to start out by talking about trades from yesterday and the overnight trades that we took, and go through all of the action and the setup for this morning. So yesterday for us was a quiet day. We had a position in crude oil, was up about $1.20, $1.30, and we thought the market would remain strong through the day. Market came in about 50, 60 cents off the high. We looked to get long it. We bought some at 67.90. As always, we put a stop in. It's very, very important. Obviously, all traders should use stops because a lot of times markets have slippage and moves that are too fast for us to even click the button. So we want to have stops in the marketplace. So we put a stop in at 67.40. Unfortunately, we were stopped out for a 50-cent loser. Couldn't really find trades. I wanted to be short equity indices across the U.S., especially NASDAQ. We didn't do this trade yesterday morning, but we kind of cited it early, and it really, by looking at the stocks, worked out well for people that actually did it. And some of our members did do the trade, which worked well for them, was shorting NASDAQ and being long S&P, or just shorting the NASDAQ. That came in about $30, and you were able to capture that versus the S&P really not moving. And then that trade quickly unwound, and actually the NASDAQ again was outperforming the S&P late in the day. Interesting yesterday to look. There were really no downticks to be had across the board on U.S. equities, and it was hard to, stay short. So what we did was we were short S&Ps at 37, and at the end of the day, they were trading about 41, 42. I wanted to remain in the short, and what we do a lot of times, and it's pretty vanilla for people out there to look at, is buying an option that acts as a stop to stop the pain or stop the upside in the position. So we bought an option around the position at 50 at $1.90. So we're going to lose the $1.90 today. We took $10. So basically on the day, we've made $8 on that position, and we own the free call. It's trading at about 25 cents, so there's not really much in it, but if there's good news or something happens, we're going to have a free upside today. We usually just hold on to that, as a freebie, and then utilize that long to potentially sell another option on calls that are more in the money to maybe take in some premium there. So that's what we have going on from the overnight to this morning. Again, yesterday was up about 20 handles in S&P and about 45 points in NASDAQ. NASDAQ is down about 64 right now, S&P down about 16. So it's really retraced at pretty much all of the move from yesterday. So we're starting flat. What's interesting to me is going across the board here, starting out in Asia, China made a new low on the move. It's down about 20% for the year, which is what most news services and people think is a bear market. So I would say it's entered a bear market, or it's struggling in bear market territory. Nikkei was down about 2% as well. And going across the pond to European equities, what's interesting is I actually got up pretty early this morning, and European equities were actually higher early on, and all have turned lower, with the DAX down about 120 points or 1%, and across the board down 1%. The talk today is commodities, copper, year low, gold, year low, multi-year lows. There's no bid out there. We're not quite sure why. I guess it's a continuation of weak equity markets across Asia, and maybe between Asia and South America, it's just consistent selling of reserves to, keep everything afloat. So, we're keeping an eye there. Looking at oil, some people have said to me that it looks like the number last night at 4:30 was leaked early and was released at 11 o'clock, when oil abruptly turned about $1.50, and right now is about $2 off yesterday's high. I'm a little bit constructive on oil. It's the 8th down week. I would look to buy some dips in here for a trade. So that's something that we'll be looking at today, as well as equity markets in here are tradable. I think we're range bound. I think you could buy or sell S&P futures at 28 and a quarter and make money on either side. It'll be a choppy trade. On the news related front, interestingly, the Turkish lira, which Sunday night traded at about $7.25 to $7.30 pre-opening to cash Sunday night at 5 o'clock, it traded at 5.80 this morning. Early on, I think it's back to about 6 or 6 and a quarter, and that move would indicate, as Greg would say, a risk-on scenario, and we're not seeing that across the board. So maybe the equity markets out of Asia are basically, providing the stop to that. So, we're going to keep an eye on that. Scrolling through some stocks, interestingly, after the close last night, Warren Buffett came out with his filing, and of course he bought more Apple, obviously not as much as he was buying before, but for whatever reason he continues to buy. He bought Goldman Sachs. Those stocks actually last night were higher off of that, but right now Goldman is down very slightly. Banks are down small, and Apple, which was up last night at about 210, is down to 210. It's down to about 208, down about $1.50. So that's trading a bit heavy, but we'll watch that during the day today. But I see stocks slightly lower, anywhere from 50 basis points to 1.5%. So I guess it coincides with the S&P. I would like to be a buyer of dips in the S&P in here, but we're going to be flexible today. And today is an expiration day, and volatility is up. So looking at the 25 straddle, we're looking at about $13, which has been to the expensive side. Yesterday, that straddle, which was about, was around the 28.40 area, was trading at about $17. So, we're expecting really good movement today. We're going to keep an eye on, on the straddle, and, we're going to position that way. As far as, markets go, I don't really see anything S&P over NASDAQ. The technology stocks are kind of in line here for, the down move. Amazon's still above 1900. So, we'll keep an eye on that as well. And again, gold, crushed. It's down. It actually bounced a bit. It was down much more earlier. I think the low is in gold was Yeah, so 11.90 and a half. So we're trading off the lows by $3, and we'll keep an eye on that. But I think I would want to be a dip buyer in some of these commodities for a counter trend trade here. A little bit of a trend reversal maybe over the next couple of days. So that's what I see in here. Vince is not joining me today. He is out on a vacation day, so we may hear from him later in the chat, but he won't be joining this morning. So I'm riding solo in this position, and basically that's the rundown for this morning. Bonds are up again slightly. Yields have gone away from 3% into the low 280s, and I think this is an area that you could short some bonds. We haven't really played it. Again, we were going to short if it broke 3% on the 10-year. It didn't really do that significantly, so we haven't really even made a bond trade in probably a couple of weeks. But this is an area that I'd look to short. But again, you run the risk-off, scenario if the markets come off. So we'll keep an eye on that. And across currencies, dollar is slightly stronger across the board against the euro. Euro's back into the 113, low 113 handles, which is near the lows of the move. We'll keep an eye on that as well. And that's what I see this morning, and we will come back to you pre-open to go over some trades and positions that we're looking to put on for the opening. But right now, we're flat. We're watching the tape. We want to be opportunistic, and we're going to wait in here. Again, I'd like to buy, commodities on a dip. Oil is trading about 66.35. It was just about 15 cents higher. If it comes in another 15, 20 cents, look to get long for a trade. As far as S&Ps at the 25 level, I'd like to maybe sell some call spreads, again, above the market. I've explained that to you. So if you look at the 35 calls here, they're trading at $2.35. You could sell those and buy a 50 call at 35 cents. You take $2 in for the spread, and you're basically not even getting short the market till it gets to 37. And that, to me, is a good way to play it. And over the last couple of weeks in here, we've done those spreads probably about 3 or 4 times, and we've been profitable on those each time. Obviously, if it runs in the money, you have to make maneuvers to hedge the position, or the way we look at it in options is hedge the deltas as we go, which we always do. So that's the vanilla stuff that we would be looking at this morning. And again, we'll be back to you pre-opening to go over some trading ideas and positions we have on. And if something comes up in the next 30 to 40 minutes, we'll put it in the chat and we'll discuss it, and hopefully everybody will see it there. So we'll be back to you in a bit.